Good afternoon, everyone. It's Chrissy from Solstice ATR. You can find me on the website, Twitter, Instagram, Discord. We use adaptive algorithm for trading. Remember, this is for the coming week, weekly video. You can hit the smash button. As well, you can subscribe. This is for illustration use only. We are not a broker-dealer. Past performance doesn't indicate future results. We are here to give you a little helping hand about the overall market. Make sure you use it at your own risk and understand the volatility in it. Let's first go to the second slide. After the overnight action that happened between Ukraine and Russia, the market plunged. What I want to talk is about what can happen the following day if the sentiment's still down or sentiment changes to becoming bullish on a gap down. Numerous signs. You have to understand the risk, the tolerance, and watch the short term in relationship to the long term when you're swing trading and you're out. Stay aligned with the data on the chart. What I mean by it, when you're looking at an annual chart and a weekly chart 3 years going back, make sure the long-term trend's still up, or if it has reversed, make sure you understand when to exit. Volatility is still there. We still have inflation, interest rates, the Fed's still having a going issue, which they have not resolved. Really, make sure you have realistic expectation for 2022, because it may be aligning for the setup for the coming year in 2023. You have to be flexible and fluid with the market. Act on every action and reaction. Do not stay on one side. Don't get your ego involved. Take it by day. We will cover some stocks, some futures, Bitcoin, as well as ETFs. So let's go by breaking it down step by step, and I'm going to use the micro ES because I do not have fibs on it, and we'll go from there. Here we go. I have the micro ES S&P 500. As we can see, this was the annual March low. This is the May low, and we are retested part of the June low as well as the July. Last month in January, we tested this low, rallied up, we created a double top, missed it by 1 pointer and fell further down. And on Thursday afternoon, we had a nice reversal at 1:45 p.m. This is an engulfing candle after the sell-off. And I had tweeted something in the morning at 6:25, I'll show it at the end, that be careful being short. We may have a snapback and squeeze to continue higher. Maybe people have thinking me like, what's wrong with this guy? Why is he thinking that way? Because when we gap down, sometimes the market needs a relief after the news happens. If there was still more, the sentiment was bearish, that would have dragged it further down to the backside of this channel. Unfortunately, we reversed and cleared the 42.12. We cleared the October, the July, as well as the June lows. But we retested part of the May, but not the May low. So if I take this whole consolidation here, is this going to continue to the backside of the 200 SMA and snap back to the 38.50, then the 61.8, or do we reset lower? We have to trade what we see. Let's take a look at the micro Nasdaq. I'll do the same thing, micro and Q. We can see in the micro Nasdaq, if I take this consolidation from the April as well as, the May, we retested this area and we retested it here in January 24th. But unfortunately, we tested this consolidation that we had the breakout. We fell down, continued higher. We created in November a high, but in December we had a lower high. The Nasdaq Tech Sector 100 fell a little bit further. They tried to rally on that last rally, but they had a higher low, like the S&P was almost identical, double top. But the Nasdaq hit the 200, couldn't continue, fell further down. And now it's retesting this consolidation of the June breakout as well as the April. If this is going to continue, we have to pay attention to this candle. If we can clear the simple 18 simple moving average, the F3, as well as the 50 Fibonacci to continue to the 200. If not, pay attention to the channel. In this down channel, we have an open cone, but if the sentiment has changed as of Thursday, we have to have an open mind that Ukraine and Russia is not the issue. It's been going on for more than 10 years, and the Clinton administration before the Obama administration came by and they talked about it. So let's go to the next one, which would be the RTY. And I wanted to show the RTY a little bit differently because it's the small cap. We can do the micro 2K, I believe. And we can see in the micro 2 cap, which is the small Russell IWM or IWN, which is the value play, we can see we were consolidating from February last year. Eventually, we broke in November, but in December, we couldn't. We fell further down. But this looks like a double bottom, creating a W shape. If we can clear that 38, continue to the 50, clear that 2100, maybe it's called a small cap, has a sentiment change in the trend. You can see I have these two channels. Does it come back to the backside of the 38% and 2123, 2125, the sentiment if things do change in small cap? Let's take a look at the Dow Jones Industrial Average, and we'll use the micro YM. We can see that the micro YM on Thursday, it closed right at the 33.33. If you can see, if I put my mouse here on the top corner up here, when it comes up, if I put the mouse, it's going to show that level up there. It'll show you that the close was 33,053, which is a little bit higher than this. So it closed right up there on that day, and we continued higher, and we cleared the 38.2 Fib. Does this mean we can continue, or we have a mid channel right here to find support to continue higher? Let's take a look at gold, and I'm going to do the micro GC, I believe. The micro GC, as we can see, it rallied, it broke up after that noise because people are panicking. They moved to the American dollar, they moved to the crude oil, they moved as well as gold on that Thursday, on that spike in the overnight. The spike broke up, couldn't hold, eventually fell down. This was an area of tell. Hey, watch my finger at 1920. You lost it. Be careful. Maybe things are changing, and they sold it off back into that linear regression up channel here to the backside of the breakout of this candle. Does this mean gold may consolidate to continue if things get a little bit weary about the Federal Reserve Board, interest rates, and inflation? Let's see what the outcome is with Ukraine and Russia. If they do a settlement without, hurting each other, it's going to go on innocent lives. I'm not taking sides between Russia or Ukraine. I just want to hope that everything will settle down and people don't get hurt. Let's take a look at the micro CL. And the micro CL, we can see on the annual chart that we broke up a new annual high. We looked up after it fell through that 95.82. This was a tell, or even this upside channel where it broke from. That means coming back through it. Hey, take some profit if you had it from the overnight from a couple of days ago. Don't hold on to it. You're falling back inside that linear regression channel. And we had called it in our group when we said to everybody, this is a short coming back to the backside of the channel. If I did a draw channel back here from this point to this candle, you can see that we broke through the midpoint of it from the high and low. So you came a little bit under it to the 38.2 Fib or 61.8 in the micro CL. Let's take a look at BTC. Bitcoin, we can see that Bitcoin, I didn't use the micro, I just used the regular Bitcoin. I usually have gaps where they fill, where they don't fill. We created a lower high, that 47,215 has not been revisited in Bitcoin yet. And this is my line in the sand for Bitcoin. Once it clears that, the sentiment may change. We tried to look up at the 45,900 in this up channel. Couldn't hold. We consolidated for a couple of days and they sold it off. They trying now to reverse. If this is a higher low, I know this channel is broken. We can keep it there. We're going to create one more here. We are in an open cone. And if I take one from here to here, you can see that the cone is in an open wedge. And if this wedge opens, this is the consolidation of it. Retest this channel. Then you test the 2/3 of this area where BTC broke down from. I would like to see BTC coming back up. But if there's a discrepancy between the international market, the crypto mining, because I know Russia mines a lot of crypto, maybe there's a little bit of electricity there. Pay attention to price action. Do not be biased because you may see something crazy in the crypto business. Let's go to right now a couple of ETFs. What I'd like to cover is NYA, the New York Composite. We can see that the New York Composite, after the slam through the 50 and the backside of the April area, we reversed sharply and we continued higher. We're going to pay to the most of the New York Composite Index because it's giving us a clue that we cleared the 38, and this was a sharp reversal in the overall major sectors. On Friday, they rallied it high and continued higher. Let's take a look at JNK. This is the Bloomberg High Yield. You can see that they slammed it down, rallied it up on that news on Thursday as well as Friday. Let's take a look at TLT, which is the long-term bond. You can see that there was a jerk reaction at the same time. You can see IEF. We can see that. Let's go to XLP. XLP is the consumer staples. We can see this is a very important trade that happened in XLP on Thursday where they were not looking at the 200 simple moving average and the consolidation of the 38.2 that they missed. This was the prior range before, the October, November, then the December rally. Then we fell back in, and this was a 200 SMA, missed the consolidation. You can see it here. We still have this professional gap on that move up. We retested, and this candle reclaimed these two candles. This tells me that the sentiment has changed. But where did we retest? The 18 and the 50 simple moving average, and we closed right on the 61.8. Pay attention to the XLP consumer staples. XLF. This is the financial. You can see a similar situation in the financial. We U-turned, we gapped up after the gap down. They rallied it up, couldn't. I consider this as like there's a candle here on this push down. We do have this professional gap in here on the reverse back up. We can see that it's trying to reclaim ground in XLF. XLE, we'll do one more, and we can see that there was consolidation there. XLV. We can see that XLV, after that large push down, we reclaimed the 50 Fibonacci, and we reversed back to reclaim 1, 2, 3, 4, 5 days that were engulfed with that bad move on Thursday. Rally up, continue higher. We gap up here, professional gap, and we continue to the backside of the 200 SMA and the sloping down channel. Does this mean we hold the 38 to fall back in? Do we continue back up, clear the 50 simple, 50 Fibonacci, and the 61.8? Let's go take a look at one more ETFs, and let's do XLU. We'll do XLU, and this is something I wanted to do in the utility, international, as well as the overall sector. You can see that this engulfing candle, we had a lot of consolidation, down move, consolidate, fall down. There's a gap here. This engulfing candle has taken out one. Let's call these four. Let's call this one. This week was range bound. 3, 4, 5, and that's the 6th one. Look where it is in relationship to the overall move. Does this mean it holds the 18 and the 38 to continue higher, or do we fall back? We reclaim the 18 and the 200 SMA and the 116 simple moving average on the daily chart. Let's go right now, take a look at some equities, so that way some people have some kind of a setup. We can look at AAPL just a little quick. We can see that AAPL is still a little bit struggling, but on the daily chart on Thursday, from that open gap down, it missed basically the 200 simple moving average and bounced back up. On Friday, it didn't have the same strength, but it's still in a downtrend. Let's see what it does. Let's take a look at Amazon. Amazon did a nice U-turn as well after the gap, but this is a higher low. Even if you draw a channel, this was wicked. Then we looked up, you can see it here. Does this mean that this holds the 18 simple moving average and reclaim the 78.2 on the annual chart in Amazon? Let's take a look at Facebook. After the punishment in Facebook, after all that's happened from the earning, Facebook has tried to reclaim this area, put this gap that it had to refill, which it filled from way back there from a year and a half ago. So we are trying to reclaim. If we can reclaim the 216 and the 238, I think Facebook can come back to the 244.61 on the annual chart. This may act as a back-end channel to fill that 18 simple moving average in that channel that it fell from, Facebook. Let's take a look at Google. Google, you can see it's trying to reclaim. Couple of the days it tested the 200 SMA, touched the 38.2 and fell back down right to close inside that range. Let's see what Google does. Let's take a look at Nflx. After the earning report, it has been damaged. Does this mean that Netflix is coming to reclaim the backside of the channel it fell from? If it does and claims the down channel here, we can probably see the backside of the scandal here on Netflix. Let's take a look at Tesla, the EV products. I'm not usually a good fan of EV companies. I know a lot of people like them. I'm not going to go there because I don't think they are. I mean, right now they're using electricity. Electricity comes from a source, either from coal, gas, or some natural resource coming from the ground. They're not environmental friendly like they say it is, because they are hazardous material. When you have to dispose of those batteries, there's a problem in them. Until they fix that problem and they can create more solar power to them to generate their own electricity without using coal and oil, this gives me the opportunity to look at those companies and say, you know what, it makes sense, Tesla. The technology is a great company. The car, not so in my own eyes, okay? So that's my biased opinion. Don't listen to me, but at least it gives you what I'm thinking. Let's take a look at Boeing. You can see Boeing is trying to come back inside that linear regression channel. It's had an inside day. It looked up and closed on the 38.2. Does this mean it can claim this gap here, the 50 SMA, as well as the 50 fib and the 18? If it does, that would be great, coming back to the upside of this channel. Let's take a look at LMT. I don't want to go too much in the defensive sector. People, war creates, money and everything that, and even when inflation gets included, part of the economy, to increase interest rates. Usually after inflation, you usually have 2 to 3 year, 40 to 70% rate of return, even with this downside market. Pay attention to what they are and what's given to you. Lockheed Martin spiked up and it cleared the annual high from last year in this area here, the 394. This is an area you have to pay attention to in case it comes back in that range, or does it continue higher. Let's take a look at COST, and I'll do one banking sector. We can see that Costco and Biogen IBB. I'll show you something in there. A biotech, this looks like it's setting up with a cup and handle. This is a nice reversal engulfing these candles. If it clears the 50 simple moving average, I am thinking it will clear this gap here, which has been filled here. You can see these gaps are filled, no longer valid. I usually put them on. I'm going to remove those gaps out of here so you can see me. You can mark them on your charts. Oops. You can mark them on your charts so that way you are aware of them. Remove drawing, but once they are visited, they no longer valid. Let's take a look at IBB. We were looking at it in room yesterday, and I said, hey, let's pay attention to the linear regression down channel. If it ends up spiking up to the 18 simple moving average and clearing this candle, if it consolidates and holds the 122, it has more potential to get some movements in it. So let's go back to the ES, and what I want to do here, you can see all my madness and channels and everything that's on this chart. Instead of putting the micro, I know we are still in a bearish zone. The sentiment's still down on the long term, but strengths confirmed on an up bar. This means there may have been a change after the Thursday afternoon push in the market. So I want you to pay attention to what's offered to us. I know we are in a linear regression down channel. If I put the SPY, you can see it. We'll do SPY. So you can, oops. Okay. Typo. SPY. Oops. Why is it doing that? SPY. It's basically the operator, which is myself. So you can see that we retested and we reclaimed this area. We are in this consolidation. We are still in a downtrend. We can put this downtrend channel up here to pay attention to it, but we have reclaimed part of these 2 days. Pay attention if it does not retest the gap in here in SPY in order to continue higher to reclaim the 50, the 18, then the 50 Fibonacci in the backside of the 61 and the 50 SMA in the 116. If it does not and it falls back here, we'll pay for the attention to the midpoint of this range at 420. Let's go back to ES, and I want to show you the profile on it using the monkey bars. We can go to style. In the setting, you can go standard monkey bars. This is the monthly monkey bars on the charts. You can see that the sentiment and the time spent was lower. This is why we went lower, but most of the time and POC is higher after that push back down. What I want to do is go to a 10-day or 5 days. We're going to go intraday. We're going to do 5 days range, and we're going to do, let's say 30 minutes so you can see what I'm talking about. What I wanted to show, I know the time spent was lower, but the POC didn't immigrate when we pushed higher. I'll move in this range here in the last 5 days. What I want to talk about is where the open is in relation. This is the open. This is the close in the market. We pushed down and we rallied to close right up here, but the POC and the time spent was never retested, and we continued higher. So on Friday, when we came back where we closed, we tested part of the move back up. We tested the 50 Fibonacci. We reversed at the 42.26. This was the open. You can see it. We fell back down. The time spent is lower in relationship where the POC migrated to the high. We had 3 different distributions, and we pushed higher to close right at the 43.80.50. We retested the 84. You can see if I put my mouse on it, on the top right left corner, you can see the open was 42.6675, the high was 43.84 and the low was 42.2750, and the close was 43.8050. So what I want you to remember, each distribution in the chart tells you, hey, there's 3 distribution. I consider these like 3 days. If we do not retest this area here in this small gap here or here, so the sentiment stays up and we can continue higher to reset to this area and clear the prior week. And if we fall back in this range, pay attention to this area, the 42.62 area, 65. This is very critical. If we do not retest the 75 or neither between the 29.43, 28 and 43.45 area, because we pushed higher on light volume. If I put the Nasdaq, you can see a similar situation. You can see that the Nasdaq, after the push, we had the consolidation in the Nasdaq. The strongest one was actually the Dow, and the small cap showed a little different sentiment. And I'll put the RTY. Oops. RTY. You can see the RTY, and if I put the YM, you can see the YM 3 distributions. Time spent was lower, but the POC migrated higher. So I hope this was helpful. We're going to change it back from standard. We can see the candles where we are in relationship on the Dow as well. I hope this was helpful. Hit the smash button if you like. If you'd like to subscribe, it's free, the weekly video. And over and out. Take care. See you next week.